So hello and welcome back guys to the channel, and in this video we are now back to the VIX pairs. Once again, we're back on the synthetic indices, and I've mainly selected the step index, in which we're going to do a top-down analysis on the step index by using the MMC footprint strategy. Now I picked the step index because it's a very volatile pair that I know most of the synthetic indices trader like. So yeah, so in this video we're going to do mainly a top-down breakdown of this pair, how we could have traded it, how we could have observed it in such a way that we could have clearly seen those opportunities, and how could have we positioned ourselves in those opportunities to catch those moves, right? So without further ado guys, don't forget to like, subscribe if you haven't, turn that bell button on for notifications, and let's get into it, right? So judging by the three major things that we do use in the MMC footprint strategy, which are basically structure, S&D, and Wyckoff or confirmation, right? But in this part, Wyckoff and confirmation are exclusive for the mentorship so far. So in this video, we're just particularly going to be dealing with structure and S&D, right? So with that being said, if you do want to get that premium level of knowledge and see or learn in depth about the MMC footprint strategy, you could DM us on Instagram at officialgreenpipsfx, and all the information about you joining our mentorship program will be given to you there. But without further ado guys, let's see how we could have analyzed the step index by using these major two things, which are structure and S&D, and how many opportunities could we have got, as well as how could we have tackled these opportunities and in return result into profitability, right? So let's start now. So we had this downtrend that's been here for a very long term. Now this downtrend originated here, right? So let's see how we could have positioned ourselves from way back here and catch every single move or opportunity that was there for us to catch on the way down to here, right? So we'll start here. So the market pushed up, right, in this intermediary uptrend, in which let's now start with structural analysis, right? Let's create that structural narrative, our structural story, in which that story tells us now where the market is going. So we had the low and then the high, right? The low, the break of this previous high, and henceforth creating a new high here. Now, with the creation of this high, created this right here as its low, right? High, low. And then the market pushed up but failed to break this high, resulting into a down move that resulted into the breaking of this low, thus creating now a lower low, meaning that in here there is a what? There is a change of character here, right? So I do not have, okay, so the market has now shifted its structure from bullish to bearish. Now, notice what happens next. What happens next is this pullback that comes and liquidates this high. Why is this high liquidated, right? So let's put this a little bit aside, this too, right? What we see here is these two beautiful double tops, or liquidity, in another sense, in another concept of understanding, right? Because we know wherever there's equal highs or equal lows, there's liquidity above or below them in their respective manner. Lo and behold, with these equal highs here meant that there's liquidity above here. People who sold here have their stop loss. I mean, people who sold here have their stop losses above here. Thus, the smart money just pushes this market down, right? Creating this low, pushes it back up, liquidating these highs, taking these stop losses, taking these dumb traders out of the market through this absorption move, right? And if you do not know what absorption means, make sure you go back to the previous video and search the absorption and mitigation video. It's actually there, and you will know what absorption means, and thenceforth we will be together in this concept here. Okay, so what did I just do? Okay, so there was a slight problem with my internet, but it's fixed, and let's continue. So this move comes to liquidate these highs, right? Lo and behold, we now have another breaker structure, right? A new structural low being put into place, meaning that what? Okay, now forget about everything, right? You have your low being put into place, meaning that, okay, so structure is now officially delivering bearish, right? We had this change of character here, right? This change of character here, and now we have a breaker structure here. So this break here, right? So with this breaker structure here, puts us officially into a downtrend, right? So we now have our structural narrative, right? We now know the structure is pushing bearish. So after we have our structural narrative, what do we look for next, right? It's the S&D, right? Our point of interest. Where do we want to trade from? Where is that retracement going to be? So coming to the concept of supply and demand, lo and behold, we do have that zone right there. Now, we do have that zone right there. Boom. Now, so we now have the zone, but above this zone, there's a what? There's a wick, right? As you can see, this beautiful little wick here. So you could either use that or use this as your zone. Now that's completely up to you based on your level of refinement. But lo and behold, so there you have your structural point, you have your structural narrative, and you also have your supply and demand. So with this being the low, price is going to create a high. Now you have highlighted this as your supply zone that retracement is going to go to and then push off, right, into creation of what? New lows. Lo and behold, price goes there. Now with lower time frame confirmation, it means that within here you will be able to spot that Wyckofian thing, right? This shift of structure, boom, right? So in here you'll be able to find something like this in which you'll be able to trade from with your stop loss above the high, but we're actually not going to be talking about that because it's exclusive for the mentorship. Now let's say you have your short position there, your stop loss is just above that high and you're looking to target this low, right? Boom. So lo and behold, there's your trade. This is a 1 to 3 hour trade. Now let's continue, right? So we're just creating our structural narrative. That's the first and most important thing, right? So you have a low and a lower low, a lower high. So what we're anticipating is the liquidation of this high, right? So this is our next liquidity point from here, right? So price comes and takes this liquidity, forming this low here. Now with the formation of this low, so we have now a high and a low. We already have our structural narrative. We already have that story to tell, right? Structure is pushing where? Okay, boom, boom. So we are back online. That was just a slight internet connection problem, and let's continue, right? Okay, so we now have the high and the low. What we're looking for next, that we already have our structural narrative, is the S&D zone, right? Our POI, our point of interest, in which we'll be interested to sell from. Lo and behold, you do have this zone here and this zone here, right? Now with how to spot the most correct zone, you should actually go and watch out that video on how to spot or pick the right order block or supply and demand zone. You'll be able to know, right? So lo and behold, price could either come here or here. Now we're still waiting, right? Because let's assume price is here, right? So we're waiting for the pullback to see where it's going. So it's either coming here. So what we're waiting to see is that price comes here, right? Price coming, giving us that wake off thing and then pushing off. Or price comes here, giving us that wake off thing and then what? Pushing off. Now, either of those two concepts can happen. Lo and behold, price comes here, taps. So within this area, with lower time frame confirmation through wake off, you will be able to get your entry. But okay, but we're basically not going to be talking about this. So lo and behold, there's your second entry. Your stop loss just above the high, above the zone, right? And you're looking to target the low, right? Because in the downtrend, the lows are always our next liquidity points, right? So this is our next liquidity run. We expect price to come to run this liquidity and then continue with its trend. Now, with that being said, price goes, runs that liquidity and leaving us now with what? So we had this as the high and this right here is the low. We already have our structural narrative that price is still pushing bearish. So that being said, we have our structural narrative. Now we go to the second part on the supply and demand. Lo and behold, you also have two zones, there and there, right? So we're also waiting for the same thing, right? Because if we do have structure being pushing like this, right? So we have this break of structure here. Once we have this break of structure, it means that we're waiting for whatever supply and demand zone that is in here, right? For the supply zone that's in there, for price to go make that pullback, right? Mitigate that and then what? Push off to come and liquidate this low, right? Because the lows are always our liquidity points. So that being said, this right here is exactly what happens here. Price goes, to your first zone, right? It taps it and then leaves. Now with this tap here, within lower time frame confirmation through Wyckoff, you will be able to get your entry. But in this video, we're just assuming that the entries are based on the zones, right? So boom, that's your third entry. You're looking to target the lows as usual there. So you're looking to target the lows, since this low right here is your next liquidity run anticipation. Lo and behold, your liquidity run anticipated has been very well anticipated. So price now breaks off, goes to make a new low here, right? So again, you already have your structural narrative being put into play, right? Because you have a lower high and a lower low, meaning that you're now looking for that zone for price to go to tap into. Lo and behold, there's your zone. Price comes here, right? Price comes here, taps it and leaves. So let's do this. Price comes there, taps it, leaves. Boom. There. So there's your trade, right? Once again, price goes back up, right? So now you have this break here. Okay, let's use the brush thing. So now you have this break here, meaning that, okay, since you have the break, you're now looking for, I mean, your structural narrative has already been put into place once again, right? Because you have a higher low, lower low, and I mean this lower high and lower low, right? So with the lower low being put into place, you now anticipate that that pullback. Now, where's the pullback going, right? To the wick, since the wick serves as its own supply zone, right? So lo and behold, that there is another entry, right? Okay, so let's just put it at the end of this. Boom. So that's another entry. Stop loss at the high, and you're looking to target the low, because the lows, as I said, are the next liquidity runs. Boom, right there. So this low here is your next liquidity run and has been run amazingly, right? So after this, right? So this is the lower high being put into place, and now you have your lower low here, right? We're just following major structural points. You have your lower low, lo and behold, your structural narrative has been put into place, and there's your supply and demand zone, right? With this, with the wicks emerging, which, as I did say before, that this is just a simple concept of absorption. Now, the major disadvantage that you guys could face is that without lower time frame confirmation, if you did take an entry here and position your stop loss above the high, and you're looking to target the low, right? So this trade takes you out, but it takes you out. But although you're not wrong about your structural narrative, you're not wrong about your anticipation of price, but you just didn't have that lower time frame confirmation. Because with lower time frame confirmation, moves like this will never take you out, since what we're waiting for in the lower time frames is to see that price goes up and then break structural lows downwards, right? We want to see that shift of market structure from bullish to bearish, right? So we want to see this in here, right? In order for us to be able to position ourselves at that retest to where? To any supply zone left in there, right? To do that mitigation for smart money positions to be accumulated and filled. Lo and behold, price to deliver where? Lower, as it's intended to. Right? So that means that with lower time frame confirmation, you will be almost very profitable with every entry that you take, with very little risk being put into place. Now, so price goes back up with lower time frame confirmation. You could have been able to catch this very beautifully, but due to the lack of that, you're taken out. But it doesn't mean that you were wrong, because lo and behold, the next liquidity run, as anticipated, was taken, right? So price comes back, makes a low, and then that retest towards where the supply zone here, right? This beautiful retest here, meaning that this, yet again, this is your entry there, your stop loss just above the high, and you're looking to target where? This low, right? So you're looking to target that low there. Lo and behold, guys, so this is the power of MMC footprint strategy being applied to the synthetic indices, right? And this is the step index. So meaning that all the way from up here, you would have been right in each and every single move, right? Except this one that takes you out. But as I said, it's just due to the lack of lower time frame confirmation, you were taken out. But yet again, if you do want to get that premium level of knowledge and understand everything in depth on that MMC footprint strategy, You could DM us on Instagram at officialgreenpipsfx, and we will be more than happy to receive you. Now, with that being said, guys, don't forget to like if you did enjoy the video. If you didn't, then let me know why in the comments. Then subscribe if you haven't. Turn that bell button on for notifications. And until the next time, guys, peace.